Hey, in this lecture, we're going to go over how to choose a broker. There are two main categories of brokers, no dealing desk brokers and dealing desk brokers. Let's cover the dealing desk brokers first. And to follow along, you would be on the page Forex Brokers. Dealing desk brokers are market makers. They will match your order with an opposite order from other customers that they have. If they can't match the order, then they'll take an opposite position themselves. And sometimes they don't even take a position, meaning they are trading directly against you. Since they are a market maker, they can set the spread to whatever they want. It's usually a fixed spread, but that's not necessarily good because if you're a scalper, you want your spread to be as low as possible. Otherwise, the spread should be fine. Also, the quotes that you see on your trading platform of a dealing desk broker, they could be different from the global market. And some traders have complained that their broker could be manipulating the prices. Another thing with dealing desk brokers, there is a potential for stop hunting. Stop hunting is when they know where your stops are and they move the price to that level to take you out of your trade at a loss. Now, normally with institutional traders, they stop hunt also, but they can only move the market so much because it depends on what the global market will allow. But with dealing desk brokers, since they have control over the price that you see, they can move it whichever way they want to a certain extent, and it doesn't happen often because of the competition there. They don't want their customers to leave, but it does happen enough where you should be aware. To avoid all of this, you could go with a no dealing desk broker. With a no dealing desk broker, they are essentially the middleman between your order and the liquidity provider. The liquidity providers are the major banks usually. There are two types of no dealing desk brokers, STP and ECN. STP is straight through processing and ECN is electronic communications network. With an STP, they send your order straight through to the liquidity provider and they add on a small fee for themselves in the form of a commission or a slightly increased spread. With an ECN broker, your order is sent to the ECN network where other participants of the ECN network are. These participants include major banks, hedge funds, so you're getting a good price there. And the bid and ask prices are viewable by anyone, and you can even have a depth of market. We'll get into that in a later lecture. The other thing you need to consider is whether your broker is regulated or not. Now, it's always a good idea to go with a regulated broker. Always make sure your broker is regulated. There is one exception to this, though. That exception is for US traders. In the US, they have stricter regulations on Forex brokers, and some strategies they require better terms. Maybe the trader is looking for a higher leverage or the ability to hedge. These are things that the US brokers do not allow. So what they do is they find an offshore broker, and to do that, they would have to go with a broker that is not regulated in the US. There's nothing wrong with doing that as long as they accept US clients. As long as the trader is reporting their income, that's perfectly legal. Also, at the bottom of this infographic, you'll see a list of the regulatory agencies that are covering brokers in their countries. So in the next lecture, we're going to go over where to look to find a broker, how to rate them, review them, and what to do if you are a US trader and you want to go with the non-US broker. And I'll see you there. In this lecture, we're going to go over reviewing brokers and the options available for US traders. Now, for those of you that are not in the US, it's simple. Just go with a regulated broker who has been around for a while and meets your requirements, and you should be okay. But if you are in the US, then you do have regulated brokers available for you, but they don't always meet your requirements. So if you plan on trading long term and you don't want to use more than 50 to 1 leverage, then you're probably better off going with the US regulated broker. But just keep in mind that all regulated brokers are not the same. They have been fined in the past, some of them, not all of them, and they probably will in the future for unethical practices. But if you are a scalper or you want higher leverage, then you're going to have to go offshore to find your broker. Be careful when searching for brokers online. A lot of Forex broker review sites, they just use affiliate links hoping you'll click on them without giving you an impartial review of the broker. But this one that I'm about to share with you now, they have been around for a while. Their reviews are from the customers, and they are impartial. So let's go ahead and do that. Go to the site called forexpeacearmy.com, and once you have that up, in the search you can type in the name of the broker that you want to review. A popular one here in the US is forex.com, so let's put that in there, and this is what we get. They have pretty good number of reviews. The rating is not so great, as you can see, and you can just scroll down and read the reviews and find out why people don't like them. Another popular one is Oanda, OANDA, and they have a lot of reviews also. Their rating is so-so, and you can scroll down and see their complaints or if they're satisfied. Another one, FXCM. Let's put that in there, and we get, looks like they had some fines, so that's a red flag. You look at their reviews, it's the ratings, it's not so great, and the reviews, you can see people are not happy with this broker. So whatever broker you're considering, whether it's in the US or outside, just run it through this site and see what you come up with. It'll make your decision process much simpler. A good one that I used in the past is Talonix. They are pretty good. As you can see, the reviews are 4 out of 5 stars. But unfortunately with this broker, they no longer accept US clients. So let's see what other options there are. There is another good one called Trader's Way. Trader's Way. You can see the ratings are pretty good. A lot of reviews, and people are satisfied with them for the most part. Another good thing about this site is the broker has a chance to respond to the customer reviews. And here is one, JAFX. This one is pretty good. Only has a few reviews, but they seem okay. This is the one we're going to be using for our demo account. So let's go ahead and do that now. Once you get on the broker site, JAFX, and again, you can use any broker that you want for your demo. It's good to use the broker that you plan to open a live account with. In this case, we're going to use JAFX for the remainder of this course. You don't have to. You can use any one you want. They're all going to be the same platform, only the name at the top is going to be different. So you just click on MT4 and download and run, and then you get this. Just wait for these files to finish downloading. Then you're over here, and just remember, in a demo account you're using play money, so using play money you have the potential to go crazy with it. But don't do that. Just treat it as if it was a real account. So to do that, you after putting in your information, by the way, the information is not real information. It's just for the purposes of this demo account. Go down here to where you pick your account size and try to pick something that is going to be the same as your live account. Most likely it's going to be less than 3,000, which is the lowest in the demo account. So let's go ahead and pick that number, 3,000. And then for the leverage, you want to pick the leverage that you're going to get with the broker. You can let's go with 501, and that's it. Click finish, and this is what you get. In the next lecture, we're going to go over how to use this platform, the MT4 platform, and all right, see you there. Hey there. This lecture is going to be a tutorial of the MT4 trading platform. We're doing this early in the course because the concepts that we're going to be covering later are going to come with indicators, and those indicators we're going to attach to our MT4 platform, and we're going to use them in real time, and you're going to follow along on your own platform. This lecture is more for the new traders who haven't used the platform before. We're going to go over a lot of basics. We're going to go over pretty quickly. A lot of stuff is going to be covered, so if you want to slow it down or rewatch it, that's fine. When you first open MT4, this is what you're going to get. At the bottom you'll see that if you have numbers going up there, you're getting a signal, information is coming in. You can drag this out, the market watch. It shows a list of all the currency pairs that your broker has. You can drag this up here. This right now it shows you the mailbox. Depending on how much room you use, drag it up or down. You can X out of the current chart, open new ones. You can drag the charts around, make them bigger, smaller, maximize. Over here you have the plus and minus magnifying glasses. This lets you zoom in and out of the chart. Next to that you have the different type of information, how you want the information displayed, in a line, in candles, or with bars. If you're scrolling back to historical data, then you can use this button to get back to the current price. And this other button next to it, that shifts the chart over so you can do your calculations, trend lines and support resistance lines, and see where the price might be heading. Under chart, you can click on the grid and get rid of the grid. If there are pairs that are not on the list here, you can right click this area, the market watch, and go down to show all and just click that, and everything that the broker trades is going to be on the list. In this case, you'll see that they trade a lot of stocks also. You can go over to the profiles and change to different pre-made profiles. In this case, there are 3 charts of the same currency, different time frames. And you can just click this one to maximize all the windows so they all fit nice and perfectly in the space. You can drag this back in and then maximize again. Or you can even get rid of it when you don't need it. Here's another profile, market overview. Click on this button and then click on the pair, then you can enter an order this way. But there are easier ways, we'll get into that. This is the navigator. This shows all your indicators, your expert advisors, scripts. When we add other indicators to the platform, this is where they'll show up. New order opens a new order window. This button is for programming the scripts and expert advisors and indicators. We won't be going to that in this course. As you can see, you can just X out then maximize. Then you have the bar charts, the candlestick charts, and the line charts. You can zoom in, zoom out, get rid of the grid. If you want to go back and look at to the left of the chart what happened in the past, then click this button and that allows you to go back. Otherwise it's just going to snap to the current price again. This is your indicator list. This is how you're going to add indicators to the chart. You can do it this way or through the navigator. We're going to get into all that in the relevant lectures on those specific indicators. This is where you can change the time frame: 1 minute, 5 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, monthly. In a later lecture, we're going to cover which is the best time frame you should be trading based on your trading style strategies. This is the properties. You can adjust how the charts look, the colors of it. You can get rid of the period separators. The period separators are going to be different based on your broker's time zone. This is the crosshair. This allows you to measure how many pips is from one bar to the next, or however many bars you want to go. It even counts the number of bars. This vertical line here draws vertical lines. You can double click them after they're on the chart and then move them around. And then once you have them double clicked, you can right click and delete them if you need to. This line draws horizontal lines. And this one next to it draws trend lines. We're going to get into those in later lectures. We'll get into the Fibonacci one also later. Here you can right click anywhere on the chart and then go to the indicators list, and this shows you all the indicators that are applied to the chart currently. And then you can just click them and delete them if you want to, or edit them also. Then right click again and you have a list of the objects, which are those trend lines and support and resistance lines that we just drew in. And you can delete them as well. Once you get the chart looking the way you want it, you can go up here and click on Save Template and save the chart. This box appears and you can type in the name that you want to give it the template. And then when you go to a different template, you can see the one that you saved in the list and go back to that one when you need it. I like how the JAFX template looks, so we'll just leave it on that. These other tabs are the trade, the exposure, the account history, news, alerts, mailboxes, market. This market is where you can purchase indicators and expert advisors. Signals, different code base. There's a whole community for this platform. And then the journal. But most likely you're going to leave it on the trade tab. This is going to show your current trades. Then you can just open up other pairs, apply different templates. Once you have a few charts up, you can just click this button and it'll maximize all the windows and fit them nicely into the screen. Then you can X them out and just leave it on one screen if you like. And you can go into properties, adjust the colors. And then if you make a mess, you can just go back to the template you were at before. That's it for this lecture on the tutorial of the MT4 trading platform. In the next lecture, we're going to go over the different types of trading analysis. There are 3, and I'll see you there. Hey, welcome back. In this video, we're going to go over the 3 different types of Forex market analysis. I would like you to turn to the page that looks like this, Forex market analysis, and we'll put it up here. There are three types of Forex market analysis: fundamental analysis, technical analysis, and sentiment analysis. There's no order for them. Some prefer to use just one, some use two of them, some use all of them in correlation with their trading. The first one we'll cover is fundamental analysis. This looks at the economy of a country, the supply and demand, the political factors, the economic and social factors, whether they're good or whether they're bad. It doesn't just look at the current situation, it looks at the projected health of the economy also. In a later lecture, we're going to go over the economies of specific countries, and those pages were going to be Australia, Canada, Japan, UK. The second type of analysis is technical analysis. Technical analysis can be summed up into three words: history repeats itself. Prices are expected to reverse or continue at certain levels based on technical indicators, and since so many people are looking at these levels, it actually makes the prices do what they're expecting, sort of like a self-fulfilling prophecy. So you could say technical analysis is a probability analysis. It doesn't always work out, but it should work out more often than not. So the trader's asking, would the same thing happen if these conditions happened again? Also, most retail traders are technical analysts, and because of that, it makes this type of analysis more effective. The last type of analysis is sentiment analysis. This type of analysis not too many people use, but it is a good one. Sentiment analysis is the opinion of people on where the market is headed. It's not an actual strategy, but it's more of a guideline that you can use in correlation with the other types of analysis. There is a way to get this analysis. It's called a COT report, the Commitment of Traders. That report is released every Friday by the CFTC. And we're going to go over in more detail on that report in a later lecture. It's going to look like the sentiment COT report. As a general rule, long-term traders can use any of the three types of analysis, but short-term traders should stick to the technical analysis, unless they're trading the news, which is fundamental analysis. That also we're going to get into a later lecture, trading the news, and that's going to come right after the COT report, trading the news. So just remember to use whatever works best for you. There's no rules on which is better or not. It's all up to the individual trader. And that's it for this lecture. On the next lecture, we're going to go into Forex charts. All right. Hi, this lecture is on the different types of charts. Charts are important. It shows where the current price is and it shows where the price has been. To follow along, turn to the page called Charts, Forex Charts. It looks like this, and we'll put it up right here. You can do your analysis on charts to forecast where price may be going. You can identify patterns on the charts, patterns that tend to repeat themselves. You can add indicators to the charts to have more confirmation in your trading. There are three main types of charts: the line chart, the bar chart, and the candlestick chart. There are others like the Renko chart, the point and figure chart, and the Kagi chart, but those are not used as much, so we're only going to stick with these three main ones. The line chart. The line chart gives you a quick overview of the market, whether it's trending or not. For example, if it starts down here and it's a line going up, then you know you're in an uptrend. But if it's mostly a horizontal line, then you're in a range. So that's what it's good for, the line chart, an overview. It's not really used when you place your actual trades, because there's not enough information on this line chart. For that, we're going to look at bar charts. Bar charts show the open, the high, the low, and the close of that bar. For example, if you're looking at an 1 hour chart, then each bar represents 1 hour. Then each bar shows the opening price, and then it shows how high it's gone or how low it's gone, and then it shows the closing price. Then we have candlestick charts. Candlestick charts were first used by the Japanese, and then they became popular in the West, mainly due to the efforts by a guy named Steve Nissen. I don't know if I'm saying his name correctly. I apologize if I'm not. Candlesticks show the same information as a bar chart, except they just present it a little differently. The open and the close of a bar is represented by the body of the candle, and the high and the low are the wicks of that candle. Those wicks, some people like to call them shadows also, but we're going to call them wicks. The colors of the candle can be set to whatever the trader has set it to, but usually the red color means the bar has closed from an opening price. It went down to a lower close price. And a green candle would mean that from the opening price, the price has risen and closed higher than that opening price during that same bar. Many traders prefer the candlestick charts over the other charts, mostly because it's easier to identify patterns. Those patterns we're going to get into in a little later in this course. Candlestick patterns can be used in conjunction with other strategies and are a leading indicator showing where price may go, as opposed to lagging indicators where they show the strength of a move, whereas leading indicators show the prediction of a move. And on your MT4 platform, you can switch between the different chart types using these buttons here: line, bar, candle. Alright, that's it for this lecture. On the next lecture, we're going to go over trend lines and channels. See you there. Hey, welcome back. In this lecture, we're going to cover trend lines and channels. Before we get into trend lines, let's go over exactly what a trend is. A trend is basically the direction that the market is going. It's always a good idea to trade with the trend. The institutional traders are trading with the trend, so it's always a good idea to follow what the big sharks do. Trends exist in any time frame, and it's a good idea to correlate the trends over various time frames, and that should help you with your trading. We'll get into later how to trade multiple time frames in a later lecture, and for now let's go ahead and get into trend lines and channels. A trend line is a line where price action has come to and reversed. You want to draw trends. Say if the price action is going up, you want to draw the trend line below the price. If the price action is going down, you want to draw the trend line above. You can also think of trend lines as a diagonal support and resistance line. And support and resistance we'll get into in the next lecture right after this. Now channels are very similar to trend lines, except you have a trend line below the price and above the price, and both lines are parallel to each other. Both identify the direction that the market is going, and if your strategy calls for it, that's the direction that you would only take your trades in. Now if we look at the MT4 platform, you can follow along on your own platform. We would get to the trend lines with this button that has a diagonal line on it. Click that, and then click on the chart next to a price where price has reversed, and then you can draw in the line like so. Try to get as close to the reversal points as you can, and the more touches you have to the line, the stronger the line is. And if the price breaks the line, then you can redraw the line like this, and to keep it accurate. Just remember, the price doesn't always reverse right at the line. It's just a general area where there is a reversal possible. For channels, you can click this button that shows a tiny channel and a small E in the corner. If you hover over it, it says equidistant channel. So click that and then click on the chart near a price point and you have your channels. When you see the dots, that means you can adjust the channels. If you don't see those little dots, then just double click one of the lines. And if you put your cursor on the single dot line, then you can adjust the width of the channel. Just remember, these are just tools that you can use in your trading strategies. So you want there to be more evidence before you place an actual trade. That's it for this lecture on channels and trend lines. In the next lecture, we're going to go over support and resistance zones. See you there. Hey, welcome back. This lecture is going to be on support and resistance zones. Turn to the page that looks like this. Support and resistance zones are levels where prices come to and then reverse. When this happens more than once, then it becomes a valid support and resistance zone. I'm calling them zones because these lines are not black and white. They're more like gray areas. Price doesn't come exactly to the line and reverse just in that general area. So that's why we're calling them zones. Support and resistance zones are the most powerful tools that you can have in your Forex trading. Now, price doesn't go from one support to the resistance line in a straight line. It sort of meanders its way over there. And every time it turns, that's another minor zone if more than one time it has done that at that level. Now, if it hits a zone 3 or more times, then that becomes a very strong support and resistance zone. You can consider whole numbers to be support and resistance zones also. Price doesn't have to touch that area. It's just understood that it's a psychological level. So price is going to react in some way at that area. In fact, we're going to add an indicator to our MT4 platform that shows us where these whole numbers are, the half numbers and the quarter numbers, just so we can be aware of when price is reaching them. In the resource section of this lecture, you'll find the indicator called Sweet Spots. I want you to download that, and we're going to go through how to apply that to the platform right now. First, download it and put it where you know where it's going to be. In this case, I'm putting it on the desktop. And then open up your MT4 platform and then go to Files and then Open Data folder. When you do that, then you'll get something that looks like this. Go to the MQL4 folder and then the Indicators folder. These are all the indicators that are on your platform currently. This is where we're going to be putting that Sweet Spots indicator that we just downloaded. So to do that, just drag it over to this folder or copy and paste, whichever your preference is. Then we have to close the MT4 platform because the indicator won't show up until it's restarted. So now that we got the platform back open, we go under indicators. We see that the indicator that we just put on there is there, Sweet Spots. To put it on the chart, we drag it there or double click. We can also go over here and get it that way. Custom indicators, it should be in this list. There it is. So now that we have it on the chart, you can see where the psychological levels are. The whole numbers, the quarter numbers, the half numbers. At these levels, you'll notice that price reacts. Sometimes it reverses, sometimes it just hovers there for a while before deciding which direction to go. So it's a good idea to implement these zones into your trading. As an extra, you should know that institutional traders consider these lines very important also. What they like to do is move the price just beyond it, keep it there for a small range while people are entering their orders, and then take the price back the other way so people get stopped out of their trades. So just know that these whole numbers are very important support and resistance zones. That's it for this lecture. In the next one, we're going to go over candlesticks.
See you there.